Hello, everyone. Welcome to the TradeStation Masterclass. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. And it's always a pleasure to talk about TradeStation. Today, we're going to talk about strategy elements, specifically, running a strategy on a price-based chart and some of the things that we all need to be aware of when we do that. So before we talk about, running strategies on price-based charting, let's go through some of the disclosures here. Keep in mind that every symbol and idea that I talk about is for educational purposes only. It is not a recommendation of TradeStation. Also, that active trading is not suitable for everyone, and past historical performance is no guarantee of future results. If anybody needs a little bit more information on these disclosures, go to www.tradestation.com/important-information. Give me, guys, just one moment. I just needed to shut the door here in my home office. There's a lot of noise in the hallway, and it's incredible, how much noise an air conditioning makes, right? So let's get started here. Let me switch over to my TradeStation and show you exactly what I mean by trading strategies on a price-based chart, because a lot of times we may put a strategy on a price-based chart, and it's somewhat surprising when we look at the performance report. And it may be a little bit misleading, believing that you're going to get the same results going forward. So that's pretty much what I want to do today, give you an example of a strategy that I designed on a price-based chart that doesn't really stay true to the performance report. So sometimes that's surprising, but it's also very eye-opening, because a lot of times what you see in a strategy performance report does not mean that it'll happen the same way going forward. And let's go ahead and get to it. I'm going to open up the chart analysis window just to get started. Chart analysis, here we go. All right, and I do have the S&P E-mini loaded on my screen. All right, so I do a class on price-based charting altogether because I like to explain the technicalities of price-based charting and how every one of the different types we have are built and drawn. And I think it's important that if you're going to be using price-based charting, that you understand all the different types of charting tools that we have. By default, a chart is only time-based. So this is a 5-minute chart. We have time-based, we have volume-based, which are the charts that are based on shares traded or number of transactions occurred. That's what we call a volume-based chart. But the price-based charts are the ones that are just focused on price movement. They don't care about time and they don't care about volume. All they watch is the price. And if the price moves, then you have some activity on the chart. If the price does not move, if it's kind of moving sideways, the chart will not react to that. And that's very fascinating that we can have charting tools that do that precisely. As a trader, yes, we want the prices to move, unless you're trading some options where you want the prices to be moving sideways because that's the strategy you traded. But for the most part, we want the prices to move. So how cool it is for you to have a charting application that moves, excuse me, or that that a price chart that moves only when the prices are moving. I think that's pretty cool. Let's go ahead and set up a chart here with one example. So this is not the class to teach you every single price-based chart that there is, more on how to use strategies on price-based charting. Let me go here to data, go to edit symbol. As I said earlier, this is at ES. What I'm going to do is choose one as an example, and that's going to be Renko. In Renko, you have classic, mean, and custom. I'm going to use the classic one because I think it's the simplest one to understand. The other two, mean and custom, is just variations of the same thing. It's just shifting the boxes up or down. which I'm not going to do right now. I'm just going to do the classic, and my box size is going to be 1. This is 1 point movement in the S&P 500. Right now, the futures is quoted at 3,781 or 82. You can see the price here on the right-hand side. And if I set the brick size, it's going to look at every point movement. So 3781 to 3782 to 3783. So 1 point movement, that is what is the brick size right here. Brick size is something that you do have to pay attention to, and it has to relate or correspond to the symbol that you're using. Since I'm using a symbol that is really high in value, 3,781, it makes sense to have a 1 brick size. There's different tools you can use to kind of have a measure of how the symbol is moving. Like you can use average true range to see how much it moves based on the time frame that you want to look at. But again, that's a totally separate conversation. But what I'm trying to say is that the brick size has to be appropriate for the symbol you're trading. If you pull up, a symbol like Twitter, I'm not sure what Twitter is trading at the moment, but I'm sure it's not over 100. Price movements of 1 whole point are not something that you see within minutes. Now, you may see it within days, which is possible, but if you want to have that activity that happens on an intra-day basis, maybe a 1 point movement for Twitter, it's not appropriate because it takes longer for you to reach that 1 point movement. But for something like the S&P E-mini, where you have the high at 37.97 and the low at 37.39, so you can see that I already have close to 60 points moved in just one day. From the beginning of the session, 60 points. So setting it to 1 point is going to really drill down in the details of how the S&P is moving. Okay, enough about that. Let's go ahead and see what the chart looks like. I really don't need a lot of history, so I'm just going to set it to 2 days. This uses by default tick data, so I'm going to be loading every single tick on the S&P E-mini for 2 days, and the Renko is going to draw a Renko chart for me. All right, so here it is. Renko is the type of chart that draws a box based on that 1 point movement. If the S&P moves up 1 point, you'll see a green box. And if the S&P moves down 1 point, you'll see a red box. Interesting to see what is happening right here as the bar is building. You can see where the current price of the S&P mini is. You can see that the little dash, it's kind of a lighter shade of red because it's not set in stone or on stone yet. You can see that as the box is building, it'll only become a fixed box once it reaches that 1 point movement. But if it doesn't reach that 1 point movement, you'll see a lot of this. You see the little box extending and retracting, extending and retracting, and then you have the little dash. And if it goes over to this side, you'll see green. So it works both ways. You can see the real-time movement of the Renko boxes. Let's wait a few seconds to see if it goes to the, here we go. It goes to the upside, and you can see that it switches over to a green. Now the green is going to be a lighter shade of green because, as I said at the beginning, it's not until it reaches that 1 point movement that we specified that you're going to have a real box. But the first time that I looked at these Renko charts, I was like, pretty cool. It's nice how I can see some trends being very visible here on the screen. Of course, I'm going to get a little bit of back and forth when the prices are moving sideways. But if I squeeze my chart more and more, it lends itself to finding, tops and bottoms very, very easily. Take a look at this area right here. We had an upswing, downswing, very clear, not a lot of whipsaws. Here we had a lot of, we see a little bit of back and forth between green and red, but then the trend developed again. Then we have a downswing, an upswing. So when I looked at this the first time that I was looking at price-based charting, I said, Renko, it's very, very nice how it's just showing you price movement. Um, it may not filter price noise um, on a 1 point movement like we have it here. 1 point for the S&P E-mini, it's very small. And as I said at the very beginning, we already have 60 points movements in the beginning of the session. So if you wanted to filter some of that sideways movement or the back and forth, you may want to shoot for a higher number. But I want to leave it on 1 because I want the chart to be responsive and I want the chart to show us activity in real time, because I'm going to create a strategy and I'm also going to automate a strategy. And what I want to see is the strategy reacting to real-time data. So that's the reason why I'm using 1 point. So since we already said that the Renko chart creates these very nice uptrends and downtrends, a very nice visual based on price movement, I'm going to capitalize on that to create a strategy. This is going to be a very simple strategy. And by looking at the Renko boxes, the strategy signal or the strategy rules are going to use the way that the boxes are created. And my idea here is that if you get a green box, meaning that the closing of that box is higher than the previous one, because that's technically what this is doing, is just stacking boxes on top of each other or below each other. So if we have a box that is higher than the previous one, I'm going to take a long trade. And if I have a box that is lower than the other one or the previous one, then I'm going to take a short trade. Very simple strategy rule. I want to put it here on the chart and I want to understand what it's doing, not only historically, but also in real time. So I don't have the strategy written, so let's write that strategy together. And this will be a very nice, hands-on exercise on easy language as well. So I'm going to go here to the development environment. All right. Let's go here to the little drop down for new strategy. I'm going to call this exclamation JN Renko strategy. All right. And for template, I have mine set to none. If you don't want any, template to be displayed on the document, make sure it says none, and that'll give you a blank document. So as I said earlier, my strategy rules are very simple. I'm going to say if close is greater than close 1 bar ago. So this is the way that you do a historical reference. The 1 inside square brackets means that you're looking at the previous bar. So if the close of the current bar is greater than the close of 1 bar ago, then buy next bar at market. Very simple line. And I can put this on the chart if I want to, let's go ahead and verify it and do the long side first. So let's go ahead and see what happens. I'm going to go here to my chart. I'm going to click on studies, add strategy. This is exclamation JN. And this is Renko strategy. It's all based on Renko. All right, I don't have pyramiding turned on, but I'm sure that if I scroll all the way to the back of the chart, I'm going to see an entry. Now, why is the entry there? Well, you need to understand a little bit about how the strategy works. For those of you that have been using strategies for a while, you know that the strategy uses the first 50 bars, or in this case, our 50 Renko boxes are going to be used for the calculations of the strategy. So all these, I'm sure that if I count them, I'll get about 50 boxes up until the strategy is able to generate a trade. That's why this buy entry, it's somewhere in the middle of this uptrend and not at the beginning, because it used those very first 50 bars in the calculation. But as soon as it was able to analyze the conditions, and as soon as it found a closing price greater than the previous closing price, then it enters the trade. And it's interesting that in an uptrend, whenever you're getting these green boxes, the closing of the box itself is going to be at the top. When you look at boxes that are red, of course, the close is going to be at the bottom. So when you look at this condition, let me see if I can zoom in. Yeah, I can zoom in. So when you look at this particular entry, it wasn't until this bar that the criteria for the strategy was analyzed, and then it generated the trade for the next bar. So it found that the close of this bar is greater than the previous one, sends an order to buy at market, and this is what you have right here. The entry is right there at the bottom of this Renko box. Why at the bottom? Because the bottom is the open. Remember that if the order is generated on the previous bar, the next available opportunity that it has to fill that order is at the opening of the bar. All right, so if I'll come here to the strategy properties, before I even go and talk about the short side, let me go to studies and edit strategies and see if I can turn on pyramiding. I'm going to turn pyramiding so you can see how this looks. I'm going to click OK and OK. So take a look. Every time that the condition is true, then it generates an entry onto my strategy. Let me zoom in this area and see that precisely. So yeah, close greater than previous close, buy. Close greater than previous close, buy. Take a look at this one though. You know, at the close of this bar, which is right here at the top, it met the condition, but notice where the entry is put. It's put right here at the bottom. Why is that? Because that's the opening of the next brick. Even though we know from market movement that if you have a price closing up here, most likely the next tick is going to be within the vicinity of the closing of the bar, right? I mean, you close a bar and the next price open usually is, not very far away unless, there's a lot of volatility, and then you can have these gaps show up on the chart. But for the most part, you have an opening of the bar very close to where the previous one closed, especially when you're looking at intra-day data. But take a look at the behavior of the strategy. It puts the entry right here at the bottom. Why? Because historically, when the strategy looks at the data, it doesn't see trades showing up here. It only looks at the open, the high, the low, and the close of every candle. So if I click on the background here and I look at the open, high, low, and close, let me put my glasses on. You can see how the open is the same as the high. So open and high are exactly the same, 38.74.25, and the close and the low are exactly the same, 38.73.25. So there's only two prices to pretty much, put a signal on. You either have the high or the low, and of course it selected, the opening of the bar, which in this case is the bottom part right here. If it's confusing, let me know, and we'll look at another example. But I want you guys to realize that the strategy is only looking at the prices that are within these boxes. So the same happens, on all these boxes that are turning down. The criteria is met on the prior bar where we have a closing price greater than the previous one, but the next available tick is the opening of the following bar, which is right here at the bottom. So from the get-go, that the strategy is kind of off in that particular, because it's not entering up here, is entering down here, but that's a different story. Let's go ahead and first of all turn off pyramiding. I'm going to go here to studies, edit strategies, not customize. Let's go here to properties for all and disable pyramiding. Okay, so we saw that the strategy was entering trades at some weird spots, because of the way that the bricks are stacked on top of each other. Now let's make this a little bit more weirder. Let's go here to my development environment, and I'm going to put in the command for the short side. So I'm going to say if the close is less than the close 1 bar ago, then sell short next bar at market. So similar syntax, similar condition, but this time we want the close to be less than the previous one, and it's going to sell short next bar at market. Let me verify this. When I go back here to my trade station chart, this is what happens. Now, if you look at this, it looks beautiful. I see a lot of blue line, and any blue line connecting entries just means that that's a profitable trade. And if I scroll towards the front, you can see how cool the strategy is, just following these trends up and down, up and down, up and down, trying to, buy and sell short as the price moves up and down. Now, let me show you some things before I jump over to the strategy performance report. I want you guys to see some weird things, because I want you to look at the different trades, and I want you to understand what the strategy is doing. In fact, let's look at the strategy performance report first, because usually when you put on a strategy on a chart, the first thing that you want to do is you want to see how the strategy behaved. So let's go ahead and get that out of the way, and then we'll come back and see some things that should not have happened the way that they did. So let's go here to data and pull up the strategy performance report. And I'm going to go to the performance summary. Okay, so how do you guys think that the strategy did? Well, this is pretty cool. This strategy, yeah, it did good. This strategy only goes back 2 days. So if you look at the date range up here, it started off June 12th and it ended today, June 15th. So we're talking about just a couple days or a few days of trading activity, and the strategy made $64,000. That's a red flag. It's tough to get a strategy as simple as the one that I just created to generate $64,000 in 2 days, right? It would have to do exactly what it did here, but how likely is that to happen in real time? That's the big question. If I look at my performance graph, take a look at that equity curve line. That is a perfect scenario where you have a 45-degree angle equity curve. It goes up to infinity. So I would only have to add historical data to this chart to make this even a better performance. Let's do a short test. So this is only 2 days. I'm going to go 5 days back. It'll take a little moment to load, but these are all tests that I want you guys to look at to understand what's going on. So by default, I just loaded 2 days. I'm adding 3 additional days, so you can see that the performance is going to be completely the same as it was on the prior 2. All right, so we added more days. Look up here. This is from June 7th to June 15th. So we're talking just a week of data, and we have here $123,900. I think anybody here would be very happy with a $123,000 weekly paycheck, right? Again, if I go here to my performance graphs, again, we have that same graph going in a 45-degree angle to infinity, okay? The way that I added the days, Marcel, I just typed it in. I just said 5 days, and it brought up the command line. So I'm using the command line to request 5 more days of data. So why am I laughing at this? Why am I doubting this strategy? But let's look at some trades and see what the strategy is doing that should not be doing. So let me zoom in here so we can see. For example, so here we have that scenario where we have a box that is higher, or closes higher than the previous one, then it generates a trade. We talked about this entry. This entry should not be right here at the bottom. It should be right here somewhere at the top. So just starting there, you know that your entries are being optimized just because of the nature of Renko. I didn't enter down here, I entered up here. So to a certain extent, my entries are being improved because it's choosing a lower price that probably wasn't the way that it traded if this had been traded in real time. In real time, once this brick closes and the criteria is met, it's going to generate a trade at market, and it's usually going to trade at the top right here. So that's going to eat up some of the profits that I made on this trade because of that fact. This blue dotted line that is coming over from a short trade, instead of having exited here, would have exited up here. So it's not as profitable as the report says. Same thing happens, on the short side. Let me see. Here, the criteria on the short side is met because we have a closing price lower than the previous one. So what happens next? It generates an entry for the next bar, but take a look at the Renko. Since the opening of the Renko is up here, it's making my entry seem like it's better. On a short side, the higher you put in your entry, the better. But this is not realistic. When the criteria is met, which is on the close of this bar, we are down here. But the historical backtest puts the entry up here, which is kind of improving our short entry even more. Does that make sense? So the entries are not where they should be. And if I go back to my strategy performance report, data, strategy performance report, take a look at the number of trades. This is a strategy that is trading 4,704 times in a span of 5 days. Now let me go to the trade analysis, because here it tells you total number of trades. If I go to the periodical returns, and I set this to a daily return. Let's see, daily. Yeah, daily is the one that I wanted to see. We have the net profit and the percent profitability. So the first week that it traded, which is June 7th, we have $450. Trades, yeah, this is the number of trades. 17 trades on the 7th. We have 459 trades on the 8th. 580 trades on the 9th, and 900. So this is a strategy that it's possibly going to trade 1,000 times a day. Considering the numbers here, some days are going to be less, some days are going to be more, but you can see how active the strategy is. That's also a red flag, because that means that all these price improvements that are happening on a brick to brick basis add up to the profits of this strategy. If the entry is not at the top, or it's actually at the bottom of the brick, we're talking about a 1-point movement that is not accounted for. Let's suppose that I want to factor that in as a slippage. Okay, so let's say that I'm aware that these bricks are putting the entry where they shouldn't. On a long entry, the long entry is going to be sometimes lower or higher. I can factor that in by going to the studies and going to edit strategies. And if I go to properties for all, I can say, okay, let me put in a slippage of, I don't know, 1 point is $50 on the S&P E-mini. I'm going to do, if I do $50 per trade, that's going to be $100. Let me take a look. So I'm going to do $50 per trade. Because let's not do it per trade, because sometimes the entries do fall where they should, especially when the trend continues. Let me give you an example. We pointed to a few things, but if you look at a trade that does not reverse, for example, here we have a close that is lower than the previous one. It enters the short trade. This entry is exactly where it should, because I have a closing transaction and the next bar opens. So the entries were approximately where it should. So the issues we were seeing where the entry was not, on the right side of the brick, only happens a few times. So when I come over here to studies and I go to edit strategies and I go to properties for all, I have to factor that in. When I talk about slippage, I cannot say $50 per trade, because not every single trade has that entry shifted. So I'm going to say, let me do half. I'm going to do $25 per trade. Okay, and let's see how that works. So the strategy entries don't really move because they're based on the criteria on easy language. But when I go to the strategy performance report, everything turns red. Now look at the strategy. Instead of having $123,000 in profit, I have $111,000 of loss. And that's because of the frequency of trades here. So you don't want to have a strategy that trades 1,000 times per day. That is ridiculous. Even though you have a great strategy performance report, these should be red flags that jump at you and say, stop. Let's check to see what's going on. Let's put some reality into the strategy to see what's the problem. Let me go to studies, edit strategies, properties for all. I'm going to set this back to 0. Marcellus, can this be applied to a case chart? Yes, for sure. I mean, any strategy can be applied to any ones of the price-based charts that we have available. Just be aware of some of these, behaviors, because I mean, it'll catch you by surprise. Let me show you something else. Let me go here. This is back to my ridiculous, strategy performance report. Let me make this even more ridiculous. I'm going to go here to studies. I'm going to add a strategy, and I'm going to do a dollar trailing. Dollar trailing. I'm going to click OK. For the dollar trailing, I'm going to come in here into the inputs. And I'm going to set this to a tick on Renko, which is really, it's interesting that I can set a trailing stop on just a single tick. So a single tick is 0.25. It's a quarter of a point. We know that the S&P moves in quarters of a point. So what this means that a trailing stop, as soon as I put in a trade and the market moves a tick in the opposite direction, is going to take me out. Now, how often does that happen? Very often. But let's go ahead and do something here. I'm going to multiply this by big point value. Do you guys know what big point value is? Big point value is how much every point is worth for each one of the futures contract. So I do want to track, the quarter of a point, but as it relates to value. So the big point value on the S&P E-mini is 50. Which means that for every point that it moves, that is worth $50. A quarter of that will be $12.50. So this trailing stop is going to be pretty much tracking that. When it moves $12.50 against you, it's going to exit the trade. Let's go ahead and put that on and close. And this is what happens. Made the strategy even better, right? Instead of 123,000, now I have $220,000 in just 5 days. Of course, this is creating a strategy with perfect storm conditions where everything just falls in place, and you have this humongous strategy performance report that makes no sense. And I'll tell you one clear example. Let's take a look at this short trade. Let me open my chart up. This is the short trade that I was looking at. Yeah, the condition was met. We have a lower close than the previous one. It generates a short trade, and it just keeps that trade going until this over here. Is this real though? Is this real considering that we have a one tick trailing stop? Of course not, because throughout the life of this downtrend, there must have been hundreds of times where the price reversed against you. And we have our trailing stop so tight that it's just tracking one single tick on the S&P E-mini that I would have been stopped out immediately. Why didn't I get stopped out here? Because of the way that the bricks are built. And since they're stacked on top of each other perfectly, then the strategy has no prices to get out at. It just looks at all these red boxes and it says it went down, 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 and it closed. Not real. Do not get, you know, confused about this. Do not think that this is going to be realistic results, because they are not. Once we look at the way that the strategy is generating trades in real time, it makes a lot of sense. Let's go ahead and take a look. I'm going to, what do you guys say we turn on this strategy for automation? So data, sorry, studies, edit strategies. Let's automate execution with confirmation off. Okay, so that's one of the things that you can do on strategies too. Order rejected. Okay, it's rejected probably because remember that has to sync up with what the strategy is doing. So order rejected. My orders are being rejected. Why? Let's go to the trade bar here and see. Rejected. What does it say right there? Oh, because this is not a tradable symbol, of course. Of course, ESM 22, ESU 22. Let's use ESU 22. No, don't disable automation. So we're going to take a look at the tradable symbol and see what type of results we get. On the S&P, it loaded a little bit faster because I had already loaded the tick data that is required, to build that chart. Now that I think about this, tick data is what builds the chart. Maybe if we supply tick data, that would be more realistic. We'll take a look at that in a moment. Let's just wait until this loads up. Okay, there we go. So the strategy is running. And let's wait. Okay, so here we are gonna fill this green box. Well, now it's a red box. So you can see that in real time, of course, the prices are gonna be all over the place. So you may think that it's gonna be a red box. Okay, so we're filled. Let me open up my position graph bar. Let me close all this. Okay, so I closed even my S&P position. That's okay. What I want you to start thinking about what's happening here as the chart is building. You see these exits that are showing up on areas where there's no brick. That's what happens in real time, because even though we don't have a brick in this area, the price did move through that area, and you can see that that exit was triggered there. Something that we didn't see on historical bars, because historical bars are going to attach to the actual brick. So you can see all these different entries. Notice that they're showing up on areas where they shouldn't, because there's no brick, but they're happening because the price did go through there. So what I'm trying to say is that the historical way that the chart is being built is not a real representation of where the price is trading at. So something to think about when you're running a strategy. In this buy order, we got the trailing stop being triggered. So some very, very, very sensitive strategy to what's happening to prices because of that trailing stop that is attached. As soon as there is a tick in the opposite direction, it'll just trigger the stop. So what I wanted to show you, let me go and disable strategy automation here. And notice I disabled strategy automation, and you see how it shifted those entries. And if let's go ahead and what I wanted to show you is that I can come here and let me pull up the strategy performance report. Okay, so this is the strategy performance report. If I go to studies and edit the strategy, and I go to properties for all, let's use look inside bar back testing and use one tick. Okay, let me see if the report changes. No, the report doesn't change because of the way that the bars are. So even though, you're looking inside the candle, no, it's still the orders are being generated open, high, low, close, or anywhere in between, but not outside the bar. That's what's going on. So the ticks are being used to build the bricks, but if now I'll give you an example, like over here. So tick by tick, the prices may have been up here in this area, but that's not reflected on the Renko chart. So even if a trade would have been generated up here, the strategy doesn't show it because it only sticks to the bars. So interesting. Let's see, wouldn't Jim is asking, the historical be the same if you set this strategy to update only on bar close? Well, yes. Yes, but when it comes to the trailing stop, if I look at my trailing stops here, my trailing stops are being kicked in. What I was expecting for this to happen is that I was expecting for the ticks to provide me exits somewhere in this downtrend, and it doesn't. It just seems like when it looks at Renko, it only looks, at tops and bottoms, because I'm pretty sure that throughout this downswing, there must have been an uptick in the opposite direction that would have triggered my trailing stop, and it didn't. So that's interesting. Okay. So yeah, so what I'm trying to say is that just be careful when you use strategies on a Renko or any other price-based charts, because the performance values that you get on the strategy performance report may be deceiving. So make sure that you understand the way that the orders are generated and what's in place so that you have realistic expectations. This is incredible, right? And I bet that if anyone, oh, I need to check the messages here. Hold on. Messages, event log. Okay, so look inside bar back testing was disabled. That's the reason why we didn't see any change. So look inside bar back testing is not supported for classic Renko brick chart. So the reason why we didn't see a change or we didn't see the strategy react to the look inside bar back is because it was disabled. I just hadn't seen the message here. Okay. Sure, let's see it with case. Marcella is asking, let's go here to style, go to case, and let's do candle. My target range, let's use 1 and 1 tick, same as we used in Renko. All right, so here's the results with case. Far many more trades because of the way that the case bars are being built. So I guess we need to make some adjustments here. I can remove the trailing stop and see if that helps. Let's remove the dollar trailing. Okay, so that's different, you see? So you can see that's the losing strategy. But again, when you create a strategy on any of these price-based charting, just be aware of where the entries and exits are going to be from bar to bar and have a real expectation of what the strategy can do. Run it with real-time data and see how it's triggering the orders and see if it sticks to that same behavior that the strategy is displaying. Okay, so those are some of the things that I wanted to point out in this class. And that's all I had for you guys today. So It was an interesting exercise. And if you are doing this on your own and you have any questions or would like to get a little bit more clarity, just join me and ask the experts on Friday at 11:30, and I'll make sure to we'll work on it together and try to get to the bottom of it. The easy language for sure. Yes, let's go here to easy language, and I'll copy the 2 lines of code that I used and paste them right here inside of the chat. So those are the only 2 lines that are running this strategy, so you can test and experiment. All right. Thank you guys. Have a wonderful day, wonderful afternoon. I'll see you guys tomorrow for Easy Language Answered. Goodbye.